Hello, everyone, again, and welcome. This is Online Trader Central. Welcome to new folks who've been joined us, B-Trader, TR, BD, and others. This is Online Trader Central. We do try to start on time, so we will be rounding up the musicians here. Let me see if I can find the percussion section. You know how the drummers are. Drummers, are you ready? Okay, and cue the trumpet. And with that, ladies and gentlemen, we do want to thank each and every one of you for your time and your participation today. Please put your hands together and welcome our host and presenter for today from the Stock Swoosh. Please welcome Melissa Armo.
Thank you. Thank you so much, Kevin, for that wonderful introduction. Good afternoon, everyone. My name is Melissa Armo, and I own a company called the Stock Swoosh LLC. So welcome. Thank you so much for coming today. It's a beautiful, beautiful day on the East Coast. So I know many of you are psyched up for the big game tonight, and I appreciate you taking the time to come out and listen to me talk today. And for those of you that are here, I'm going to make it worth your while. Hi, hello there. You can feel free to write in any questions you have. I'm going to be as relaxed as I can today answering questions and try to take my time and really give you some good information today. This class is on advanced technical analysis. This is a topic I could talk on for about 22 hours straight, but we only have an hour today, so I'm going to do my best to discuss and teach you what I can in this time frame. My contact information is melissa@thestockswoosh.com, and feel free to go to Twitter, Facebook, and YouTube and like me at any one of those pages to follow me. I do put a lot of videos on YouTube for presentations that I do, and I find that's very helpful for people who are following me and who have taken my class or are interested in the GAP class. So the fact is, we're going to start out, just go right into it, that money exists in the stock market. Fact. Okay? Fact right there. How do I know this? Because I'm pulling it out of the market when I trade. So the money does exist in the market, and all you have to do is look at it and see, as you see charts moving, knowing that there's real money taking place there. Transactions are going on every day through trading. So how can you make money in the market? Well, you can make money in the market trading stocks by buying or shorting stocks. As an individual trader, you can access capital by trading with leverage, and this leverage can assist you in making substantial profits, just like professional traders, if you can learn to trade like them. The key is, and this is the key, and this is the focus tonight, is learning how to trade like a professional, because that should be everyone's goal. Even if you're only doing this part-time, if you can learn to trade like a professional part-time, well, that's going to help you make more money. Therefore, that should be anyone's goal. I don't care if you're doing this as long-term investment, short-term investment, full-time or part-time, your goal should be to trade like a professional, that this was your career. This is your career. This is what you do. This is you. So how can you make significant money in the market? Well, becoming substantially successful in the market is possible as one individual. The help of leverage helps assist that, as I just discussed. One major difference between a so-so trader, okay, sometimes they make a little, sometimes they lose a little, sometimes they're flat, you know, they're all over the place, they're so-so, and a great trader is that great traders are absolute masters at technical analysis. An elevated degree of comprehension in reading price action is required for success. This is fact, all right? You can read all the fundamentals you want. Read them till you fall asleep at night, all right? Till you get exhausted reading them. But you still cannot be successful without this piece of the puzzle. You got to have this down. You got to have it. It has to be in your repertoire, and you've got to be good at it. If you do not know how to read charts in a sophisticated manner, then it's time to learn. Better time than the present. What is better than learning now? You may as well learn now if you know you're going to need this piece. Once you do, you will begin to see the potential that all the market has to offer by seeing a detail in price action that you never even knew was possible. And we're going to discuss more of this today. So people that are masters at trading have an advanced skill set. That's how they got to the position they were in. And the skill is in reading stock charts, or what is called technical analysis. The reason this is so important, and I stress this all day long in my room, is that to make significant money in the market, you must be able to track or read the pattern of the footprint of large money investing or withdrawing money at any given time. So sometimes that money is coming into the market through big vehicles, whether those are hedge funds or banks or mutual funds, whatever it is. It's large money investing, or it will withdraw the money, take it out, sell out of positions, or they will short. They can short too. This is where the advanced skill set lies in learning how to forecast. And I have this in quotes because this is forecast the direction of price through the study of past and current market data. That is really what technical analysis is, by the way. That's what it is. You're forecasting before it happens the direction of the price through the study of the past and current right now market data. You put the odds highly in your favor when you trade in the side of large institutional money. Absolutely. I never, ever, 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 ever trade against this. Never, never. I just don't do it. I won't do it. I can't do it. I won't press a button and risk $1.55. I can't do it. I just don't do it anymore. Was there a time I did this? Yes. Is this the way to trade? No. Once I realized how to trade, and I taught myself, by the way, I just can't do it. And now that I know what I do, I know it's dangerous. It's very dangerous. And if you trade with size, you really are putting yourself in a position of danger with your money when you trade against this. So you've got to have this piece. You've got to know where this footprint is in the chart. How can you tell where the side of the large money is on? Well, you have to learn an advanced way to read price patterns and charts. And by the way, whatever type of trading you do, this exists. This exists within every vehicle that's out there, because this is the way you're always making money. This is the way anything is where you're always making money. You have to track where the money positioning is. I don't care what you do or how you trade. You've got to have this, because this is where you need to be on the side of it. There will never be a time when you shouldn't be on the side of this. And that's why I said I have it starred. Triple, quadruple star. I'll never ever trade against the money now that I know where it is. So, people go to school when they're young. They do. There was a time you went to school, however much school you went to, and something happened and we thought, well, we're going to become a trader. Well, there's no reason to go to school for this necessarily. Yes, there is, because when you go to school, you learn stuff that you need. And that is applicable in the market when it's important information like technical analysis or price patterns. So you've got to make the time to learn how to trade in a higher level. I know as we get older, we think we don't want to go back to school anymore, but you know what? That's the best time. That's the best time because you're so much wiser now. You're so much more mature now. You can learn things so quickly. Your brain is so advanced. The best time to learn is when you're a certain age where you're mature, because it's not going to take you as long, and you're also going to give it weight. You're not going to go out and party all night, skip a test or a class, or not pay attention to what you're doing. You won't do that now as an adult. So actually the best time to learn is as an adult, and yet as adults we think we don't need to go to school when we learn new stuff. That's incorrect. We're doing our own selves a disservice by not realizing that learning is fun even as an adult, because we can learn faster. So receiving an advanced education, just like you were going to a university, is key in the market. There's many places you can go for an trading education. I happen to be one of the places. That's up to you. However, I know that the information that I teach is on an advanced level. And so I'm teaching this to people knowing that this is good information, that it's actually going to help them go out in the market and make money. There's many classes you can take that don't result in real information to help you make money. This isn't about reading what a moving average is, okay? The stuff I'm teaching is advanced. And even if you're a beginner, there's nothing wrong with learning advanced methodologies, because you'll grasp it over time as you see it. You've got to start somewhere, and it's good to start on an advanced level because you're going to see it for what it is rather than starting at the beginning and thinking that doing it and seeing things over and over again means that you're getting it in an advanced way. No, lots of times what happens is people learn something, they think that's it, and they don't realize that there's something that they're completely missing. And we're going to talk about that today. So you have to train your brain to read price action. This is very important. This is absolutely 100%. You've got to be there. And it's training your brain through learning the chart patterns. Traders who make millions of dollars are masters at reading charts. They are. All right. They see things in a way that is sophisticated, advanced, call it whatever you want. That is one of the ways that they produce. And in the end, it's about producing results. That's the reason you're going to continue to trade. That's the reason you're trading in the first place. We're going to talk about the market. I inputted this chart into my presentation for today, and I could have updated it for today's price action, but instead I'm going to describe it to you. I don't know where we closed, but as it turns out, this traded today the way that I called it this morning after all. We came in a little bit more than I thought we would this morning. I said, and this is me forecasting in an advanced way, the market. Every day I look at it, and I said this morning if we retrace 50% of this green bar, and don't go over the high from Friday, that's going to be very bearish if we do it. We were almost in danger of doing that, and yet we didn't. Now, every day in the morning I write down an exact number. This is this morning, okay? I don't even have this chart up. I'm going to tell you what it is, and if you have your charts up, you can look at it. I said 67.67 was a number. Do you know where we came in and bounced off of here? 67.69. I got it within 2 pennies. We bounced, rallied, and went over the high from Friday and carried through like I thought we would today, and we will carry through tomorrow, and we'll rally up to here at least. Whether or not we go past that tomorrow, I don't know. So this is my forecast, and I forecasted it correctly this morning. How did I do that? Do I just, boop, pick out a crystal ball? No, I'm reading everything that's happening in here based on an advanced skill set that I know, and I do this real time, and you must do that real time as a trader, whether you're a day trader, a swing trader, a core trader. So you read what's going on here. I've been saying all along since we gapped up here in the beginning of March that we were holding, and that this wasn't a top. And I've done several videos on this. Now, what made me say that? When many people thought this was toppy because we couldn't go above this area, and then we did a topping tail, and then we had a big red bar. I'm saying that based on an advanced skill set, and this is part of what I teach. This is not a top. It's still not a top. If the market is going to come in, it has to do something to tell me it's going to. It hasn't done that yet. Forget the moving averages. Just pretend they're not even there. All right. I use these as assists in my trading, but I don't live and die by them. Forget they're not there. This market, okay, is in a sideways / bullish range. It's neutral / bullish is how I would describe the trend in the market right now. Therefore, you cannot assume that we're coming in deep until we set a trend that says so, which could happen in a gap or anything else. So we should follow through tomorrow up into this area, up into resistance, and the gap down that happened on Friday could have done one or two things. Fallen hard into here, which it didn't do, or picked itself up off its butt and ran, and that's what it did. And I said the target was here, and that's where it halted in the end of the day. It halted here into the 50-period moving average, which was a number. It held 68 bucks. It ran into the resistance. That's all that it did. Here's the 50-minute chart. This is again from Friday. So how did I look at this? On an advanced level, what did I see? Well, we gapped down. I rated the gap, actually in the market then, and said it wasn't a highly rated gap. Therefore, I don't see it continuing in the direction of the gap, which in this case was down. This was Friday. And as soon as I saw it lift up here and rally, I said, we're going to come into a 50-minute buy setup, and the target is the 50, which is up here. All right, it could have gone all the way up to 68.50. I even had that number, but I think we get to that number tomorrow. All right, here's the number I'm talking about. Today, I bet we ran up and closed somewhere in here. I don't know the exact number. I didn't go look at it before the presentation, but I bet we ran up into here somewhere. I bet we closed either here or here, because we came in today, ran up, and then rallied into resistance. And the next resistance is here. So learning all of this information about how to read this really helps you trade, because lots of people thought that this gap would fall in on Friday, and therefore everything in the world was gapping down, and people thought they could all be shorted, but that wasn't the case. The market flipped. The market flipped around, and then the gap downs failed, and they flipped up and rallied with the market. So it's very important, and no matter what you do, to be able to read this stuff. I don't care what strategy you do. You have to be able to read this. So this is part of technical analysis. It's forecasting. What's going to happen? I'm forecasting. I'm forecasting right now. We closed probably, somewhere around here. And I'm forecasting tomorrow that we continue through, because we ran up late and went over the 68 number late in the afternoon. I'm forecasting we have the follow through tomorrow that we could have had today if we had held in the 50, but we came in first. All right, 68.22, we closed. Everybody just wrote it in there. So let's go look at that here in the 15-minute. Yeah, look at that. Beautiful. Beautiful. I bet that's a number in here I could find exactly. So this is advanced. This is a little something I'm teaching you right now here. I'm taking it with a microscope and I'm sinking it down. I'm not getting caught up in all this thing thinking that we're at a top here. I'm honing in on it. I'm saying, what is going on here? Let me look at what is happening. What is really happening here? Well, we gap down to an area of support. Was it a highly rated gap that I would play as a short? No. It would have had to do more to convince me that this was real in reference to the pull-in. But there's one big important thing I'm going to point out, and this is the whole kind of crux of today's presentation. Where is the money right now? Where is the money in the market right now? This chart right here is the daily I'm looking at. This chart right here is the daily I'm looking at. I was using the 15-minute as an example to show you where the target, where we're going to run up into. These coordinate. Let me make one other point. Chris just asked a question here. I'm wanting to show you how the coordination. I'm not pulling this out of my hair, okay? The coordination is in here. This coordinates. This number up here coordinates with this here that I'm seeing. This next level. Do you see the coordination? Okay, there it is. Okay, there it is. There's so many days when I figure stuff out in the morning when I'm taking my trades, when I'm entering and exiting, figuring out my gaps. I find it. I just find it where I have to find it on the daily, and then I go and I coordinate that with a smaller time frame, and it's the exact number. Pfft, there it is. Boom. Okay. You don't even have to second guess yourself then. All these things, they coordinate with themselves so beautifully once you see this. It's like finding. So it's like discovering plutonium, okay? Once you see this stuff and you learn it, it's like discovering plutonium, all right? So it's real, all right? The specific detailing these charts is real. You've got to know how to read it, and that's where the advanced part comes into play. So where is the side of the money, though, for what's happening right now in the market? Where's the side of the money? If you had to pick a direction, I'm saying neutral / bullish. But not everybody in the world is selling out or shorting the market. It's not evident here. We're going to look at another chart. It might be easier for you to see the trend, but for people to think that we're in a position where we're going to start selling off hard, where would that bias be coming from? It's not in here, okay? We're really neutral and we're trying to hold. We're trying desperately to hold. Whether or not we're going to do it or not is a different story, but we're trying. Because every time the market gets down, it gets bought. Every time the market gaps down, it gets bought. Falls in, tail. Falls in, tail. Gets bought, gaps down, gets bought. Yeah, one client is saying that it's extremely bullish. I don't think this is extremely bullish, but I think that there's not enough weakness here for me to say that we're coming in. Even though I love to trade bearish stuff. But my stuff I trade irregardless of the market direction no matter what. So it's really about becoming a professional. It's really about that. And you got to ask yourself, do you want to be on the top looking down or on the bottom looking up? I want to be on the top. All right. I want to be on the top and I don't want to be on the bottom. And that means, you know, I'm going to continue to advance my own trading level to a place that I can get where I need to go to the next level and so on and so on and so forth. And this should be the goal of anyone that's trading to continue to get better and learn. Part of that means you need to focus. You need motivation. What's your motivation for trading? You know, everyone has a different one. You may want to make a lot of money and become wealthy. You might want to quit another job you have. You might be doing this for savings for retirement. I spoke to one person today. His motivation was to teach his children. That was fantastic. No one ever said that to me. That was an amazing thing to hear. And a good dad. Because if someone had taught me this stuff when I was young, my whole life would be different right now. I learned this very late in life, by the way. So the thing is that everyone's motivation is different. Be aware of that. Know what it is. Be in touch with that. And that will help you move forward to do the work you need to do to learn the advanced skill set. And you really need a checklist. This is a big deal for me. Where did I even come up with this in the first place? I came up with it and invented it myself, but the irony is that you have to think of yourself as a fighter pilot, okay? You have to think of yourself as a fighter pilot. I am moving forward, and I'm going to get in my plane and go after the enemy. Every pilot has a checklist they go through. Check, 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 check. Irregardless, it's not a word. John, if you get to know me, I make up my own words. I have a lot of words, and I make them up. The swoosh, I created myself. That's the stock swoosh is a made-up word. Those of you that know me know that already. In fact, one of the people is making up a dictionary of just my words. So you have to think of yourself as a fighter pilot. When you're getting in the plane, you have a checklist. The checklist is, I'm doing this, I'm doing this, I'm doing this. If everything's ready to go, I'm taking off. I'm off in my plane, I'm going to do the job. And once the job is done, I come back to the base. So as a trainer, you have to think of yourself as a fighter pilot. And you have a checklist of things to do, and you can't take off until the checklist is done. And that's how I look at my own trading system. I have a checklist where I rate the gap. If it doesn't meet the requirements, then I can't take off. I can't do the job. I'm going to have to stay at the base today, not take a trade, not do anything. I have my own track record of my trades. I'm not publishing it. Roman is asking me a question. I did get the idea. Someone said, you know what, you need to put your picks out there. I just did this for the last week where I'm putting my picks out there, you know, ones that are working or ones that are not. I have my own records, but I'm not publishing those. But I do a sheet every morning with all my trades. And in my room, everybody sees my picks. The people that have been in my room for the last several months probably could tell you, yeah, she's pretty good, or whatever they want to say, you know. I could refer you to people that are in my room if you're interested in real information. Sure. Roman, let me answer that question at the end. Roman's asking me a more detailed question. We'll have time at the end to answer personal, specific questions like that. So don't let me forget. Let's try to get through some more of the presentation. So think of yourself as a fighter pilot where you need a checklist. Be the own pilot in your trading. Be the pilot in your trading. Take charge of what you're doing. You're the one that's piloting where you're going and the job that needs to be done. Traders who make money use advanced technical analysis skills to get the job done. That's how they got to the point of their professionals in the first place. And you'll see once you start to really get a handle on this, that learning the language of charts is a new language. It's like learning Japanese or Spanish or French or any new language, English if it's not your main language. Anytime you learn a new language, there are some challenges. Can you learn it? Yes. How long will it take you to learn it? Well, it's different for every person. However, it's possible. I know this because I taught myself and now I'm teaching other people. Here's the example that I want to go over, and I'm going to try to be very detailed in this. This was a play last week. This was DLLR. This is a daily chart. Here's something that, you know, you go and look into a glass bubble, and you say, could I ever have imagined that this thing would ever set up so beautifully? This stock opened, and I'm going to show you the 1-minute chart, and rallied up to here. The top of the high of the day of this humongous big bar trade, this beautiful move, is guess what? 1549. Do you know where that number is? The 11.9. This bar right in here. The close of this bar here, right there it is. That's it. There and there. It's the exact same number. The low of this bar here right next to it is within a penny. It's 1548. So first of all, this opened. This was an amazing gap, by the way. It was a really nice gap. Okay, so I had 100% conviction this thing would work. Despite this crazy rally up, it held to an exact number. Exactly. It held under 1550. It went to an exact number here and here. It rallied up into resistance. How would you have known that's what it is? We're going to look at some other charts, all right? But that is what it did. This is advanced to know that you could even take this thing that it was okay up here. You should have the number written down and know it exactly as well to do it as a professional. And you short it and it comes in. And this thing ran $2.50 in the day. If you didn't know anything about this, you would miss a beautiful move. And this is often what happens when these things start to go and go underway. They just fall and fall and fall and fall into themselves. And how would you even know that this was going to work? Well, I have a rating system that I teach this. I rate it. It's my checklist, just like a pilot. I go through the checklist. Yes, 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 no, yes, 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 yes. And if it rates high enough, then I do it. The checklist is in place to determine what the bias is of the direction of the stock in the daily chart for the large money pattern. When you look at this chart, when this gap is down here in the morning, what are you saying to yourself? Are you saying the money is on the long side or the short side? What do you think? Is it on the long side or the short side? Angel, you lost me there with the 48 cents. You're not in this trade until it sets up. I'm just pointing out the fact that this big tail that looks like a scary big tail here is not scary. You're shorting it on the play, which I'm going to show you. Where is the money here? Is anyone buying this? Would there be any reason at all to buy this here on the day that this opened, despite this thing here? No. No. Here's a chart. It's really squished together, but this is a weekly. I want to show you a bigger picture here of what's going on. It's not a trap to go short because it is a short, and it's a short for one reason and one reason only. The large institutional money wanted out of this thing, and that's why you need to learn how to read this type of advanced way so that you can get the play. The reason that it's so great to make money as a trader, as an individual, as one person trading, is because we can play with large money, and that helps us profit. That type of large money, institutional money in the market, helps you and I make money. That's the whole purpose of us doing this. If we wouldn't have that, we'd never get these kind of big moves in things. It's a gift. It's a good thing. So I'm happy that big money exists in the market. That allows me to make money. And just getting a speck of that, can be very profitable. So what happened here was this opened down here. If you look at the overall weekly chart of this big weekly chart of DLLR, pretend you didn't even see this happen here, all right? What would you say? You wouldn't say it's in an uptrend, would you? See, this is where the educational piece comes into it. In the day of the gap, this thing is over. It's kaputzi, okay? Why? Stock ran down here, tried to save itself, can't do it. Came in again. Now what? All right, rallied up and made a new high. Retested here and actually ran up harder. Okay, great. Everything looks fabulous. Fine. It comes into support. It lifts itself up. It can't go higher. Comes into support. Lifts itself up. It can't go higher. Oops. Wait a minute. Comes into support. Lifts itself up. Can't go higher. Problem number one. And clue to pre-gap. All right. And then this decline in here, squishing down, is another problem right before the earnings. So in this section here where this is going on, this isn't in a downtrend. It's not in a downtrend here at all. But this is sideways now. It's sideways. Because of the gap, this is now changing this from no longer sideways. It's now in a downtrend because of this gap that happened the other day. This chart is damaged now. It is no longer in an uptrend. It is not in a neutral sideways trend. It is in a downtrend because of this one person right here. This one bar that happened. That's the effect that this has. That's the great effect that gaps have. And you have to be able to read this in an advanced manner to know and have conviction, yes, this is it. These people don't want this anymore. This is a weekly chart, by the way. This is a big lot of information here. Think about what's going on. If you ran big money, you would have to make decisions to get out of stuff at some point to take some profits. So you might take some off into this run up here, depending on where you got in, whether it was here or here. Let's pretend you got in here. All right, you were in this long here and you had a nice run up. You're not down money here. All right, so you're not down money at this point. You can read advanced technical skills and you know this is real. And therefore you decide, you know what, this is crushed under a weekly support and I'm going to take profits in this now. I'm up. okay? I bought this thing at $5. I've made money in it. I may as well get out. You know, I'm not going to give half this back. And at this point here, if the people didn't take profit up here, they lost $10 already. So they have given back more than 50% of the gains. If you bought this at 5 and you're up in this to 24 and it gaps down, you're still up money. You're managing money. You're a big person now here. You have a very important job. And you're managing money and this gaps down here. You've just given back half the profit. Are you going to get back the whole thing? No. And you're going to get out of something at least. A professional would. You might have read this to get out beforehand, but not everybody does. Not everybody does. And you might have actually bought some more in here, and your cost average price now might not even be 5. All right? You might have thought this was going to hold and support. You bought it at 5. You were up in here. This ran up to 24. You're expecting it to blow through 24 at some point with the market in a bullish trend. So you decided to get some more in here. You added and cost average your price. Your price now might be 10, in which case you better get out here because you're still up, but not a lot anymore. Do you follow me? Because you took this trade and you added. So it's very important to read what's going on here with big money and the decisions they're making. That's what's creating this gap in the first place. Here's a bigger chart of the weekly. Here's a bigger chart. You can see it clearer here with this. This is the gap that happened there on the day that created this big move. Here's a nicer, closer look at what was going on in here right before the gap. So you can see this to read it. And today you can see that the side of the direction of the money on the gap is down. You can read that clearly. That's the direction. There's no question about it. I'm amazed that people have a difficulty in reading where the direction really is in charts. You know, you have to be able to do this, though, to trade in an advanced manner to make money and to see what's really happening with the larger institutional money. Here's the trade that was in DLLR. Okay, I'm going to give you 2 scenarios, one with the regular trade and 2 with the ad. This set up really nicely. Here's what happened in the morning. Ran up, topping tail, ran up again, hit that number 1549, and slapped right back down on top of itself. If you just play the 5-minute chart, here's the entry. You take it and you get the run. And even if you don't stay in it to the full on target of $13, this is a beautiful trade. Even at this entry here, this is a beautiful trade. The entry time in this, I'm gonna show you the 1 minute too, was really 9:41. The price was $15.30. The stop was over $15.55. The risk was 25 cents initially on the trade. And you can manage this risk whatever you want to put it at. The idea is getting the trade. You do the ad, and I'm going to show you on a smaller time frame how this played out. As soon as it breaks 15 again, you do the ad. You double your position. You have 4,000 shares. The risk is now 11 cents. It's less than the initial risk. So your risk is actually less now on the ad because you're lowering your stop and you're doubling your position. And it hasn't started yet. So you can do this. I like to do ads before the momentum falls into itself. I don't want to add after the momentum is already underway. I'm trying to get the price as close to the same price as I can when I trade. Stop then is over $15.25. This had a 15-cent spread, by the way. That's why the stop has to be what it has to be in this. And you exit here. The first target actually was $13.80. $14, $13.80. It ran past it. It ended up going to $12.95 in the day. There's no way to get that whole move unless you're squeezing it for every single penny. You would have made an extra $700 to $20 if you'd held this to 13. But this is a beautiful day right here, and the risk to reward is 17.8 times the amount risk made in profit from something that on the daily chart looks like is not going to work. But if you have the exact number and know exactly what you're doing to read the chart, it will work, and it does work, and this is what advanced skill set is. This is exactly what it is. This is what is allowing you to not only take the trade in the first place, get the direction right, read the momentum, see what's going to happen. This is forecasting what's going to happen before it does it. You are grabbing this trade at the top. This is skill. I mean, this is flat on skill. Here it is. Here's the first entry in here. You get the drop. It rallies back. You do the add in here. The stop goes over here plus the spread, so it's an extra 15 cents. You have 100% conviction this is going to work because you rated the gap and it rated high, and you have advanced technical skills, and you see what it did here. You know that it ran up to a number. You see that this is not buying. This is the next thing I'm going to talk about after this play. And you take the trade in here, and it wiggles and jiggles a little bit. That's fine. And then you could have even added more in here if you wanted to. You could have even added more in here, but the stop would have been the same, so you would have increased your risk. I can do that at times. I will double my risk sometimes when I have 100% in something. But if you want to keep the same risk or lower it, you do the add here, lower the stop, you're in, and it drops. It was a beautiful trade. And here it was all the way down to the end, to the target. But there's no way you're in this thing throughout the whole thing. You got to get out as soon as it triggers and bounces into the reversal time. And you might have been out of half of this even in here. All right. But this was a beautiful, beautiful run on an amazing gap because the side of the money was down. How did you know that? You read the chart and what was actually going on with this, that they were pushing it down. It was selling out. So I want to talk about these green bars in here. Hold on one second. Angel's asking me a question. Would I have gotten out of DLLR? You mean if I was in it long? Is that what you're talking about? Well, I only trade gaps, but let's just say I was in a core position in this long. Where would I have exited this? Hold on, I'll tell you. If I was in a core position with this long, I would have never bought this in here because I don't pick bottoms and stuff. So I'm not sure where I would have been in it long. I'd have to look at it. I would only enter anything on a gap. But say I was in it long, just for the purposes of this example. I actually traded this short. I did it. I called in the room. The whole room did it with me. They had a big week last week. taking my trades. So, anyways, this run up in here, I don't think I would have necessarily taken this off, although I'm not sure the bigger picture where the other data is. I'd have to even see the bigger chart on a monthly to see the data. The clue that this wasn't going to continue up here, if I was in this, you know what my clue would have been? Around these people here. I would have got out. I have an issue here when this retests in here 3 times and can't get over it. I wouldn't have a problem with this. I wouldn't have a problem with this. I wouldn't have a problem with this. I'd be slightly concerned, but I wouldn't have done anything. Wouldn't have a problem with this. Now I have a problem. And I probably would have got out somewhere in here if I was long this thing. I would have given back something. But I would have said, it's a problem. I'm where the earnings are coming up in a week. And I actually probably would have looked at this chart and said I like it as a short because I can see when these are setting up now. I've gotten to the point with my skills are so advanced, I can see when they're going to set up before they set up, if they work. Now, I can't force them to gap, but I say, well, I like this if it's gaps. And I probably would have liked this if it gapped. I probably would have said I like it if it's going to gap down. But if I was in it long, I would have been out here. All right. And yes, this was actually a call that I made. So let's go back to these green people here. This, okay, looks like a crazy person here, but the numbers coordinate themselves. The more and more we become part of an environment where trading is with machines, which is going to continue and probably continue more. There will be more machines in the market as time goes on than there are now. So therefore, you must learn how to do this stuff. The price is going to be how you're going to learn how to trade eventually. 10 years from now, you know, you will read the price in the candlesticks, but this whole idea of doing buy setups and sell setups and not looking at anything else will be totally erroneous. It's not going to work. The machines don't see a buy setup and take a trade. They're programmed, okay, with price, with numbers. So this again is another motivation for you to learn this, to get good. Because when it's forced upon you and then you're going to have to change the whole way you've ever traded since you've been trading, you're going to be under stress. You've got to just learn how to do this now. And actually at the time when this thing, I was looking at this in the morning, sometimes I can tell when stuff is heavily traded by machines. I didn't see this before it happened. And then as soon as it got underway, I said, there it is. This is a lot of machines going on. Because regular people can't make something that looks like this. But the numbers were exact numbers, which you can tell then. what's going on in this. And again, that goes back to what I was saying before about the larger institutional money, which does have black boxes that it trains and they're programmed, and that creates this type of activity and is pushing this in this direction. And it may be programmed. Sell out at once, sell if it breaks $15 and runs up to $15.49, sell. Sell 1 billion shares, whatever it is. Do you see what I'm saying? Like it says, if it breaks a number, sell up at whatever the program set is. So this is not buying that's going on in here. I very, very am harsh at looking at this every time I'm in a trade to see if the green that I'm seeing is actual trading that is short covering or buying, to see the direction of the momentum when I'm in it. So I'm looking at the direction of the momentum, you know, when I'm in this thing. And I'm saying to myself, what is going on here? What is going on here is that this is not buying. The stock was not along the day. It did go over the high of the day. I don't typically like to see that, but it didn't do it by much. And it came right back on top of itself as soon as it did. And fixed itself quickly, came in, and set up again beautifully. Does everyone see this? Ran up and hit a number. Went over the high of the day, but did an immediate topping tail, fell in. This isn't buying that's going on in here in these bars. This is covering of some shorts. Remember, this thing was trading. There was stuff going on in this in the morning here. This is on the day, but I didn't show this. There's people, stuff going on, selling out and causing the gap. And that's what was happening. So the course that I teach is called the Golden Gap, and it's a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. I do allow free retakes. The purpose of the course is, though, to help teach you what's going on with this money. It's really the purpose of my class, and what I even taught myself was to find where this large money is trading, to be on the correct side of it. It's about the power. That is the whole way that you make money as an individual trader. Why take the class that I do at all? To learn a strategy that offers momentum moves in stocks each day, to learn how to trade gaps, to learn a consistent and profitable strategy, to learn how to pick which symbol to trade on the day, which is very important to get the direction right, and to learn how to enter the stock and determine the targets, and to learn how to read charts and price action on advanced level. You will learn that in my class because I'm going through so many charts and discussing and teaching the points, and they force you to look at the things that I am teaching. It's forcing you to do this in the actual rating system. And it's a multi-purpose system. More and more I have people using this in different ways. The 26-point rating system in the Golden Gap course can be used to rate stocks to play intraday. However, the 26-point rating system can be used to choose a stock to take as a swing or core trade. One of the reasons why the Golden Gap course is so unique is because the system can be used in multiple ways to trade one stock symbol. It can be used to trade in multiple time frames depending on your financial goals, whether short or long term. How is this possible? Because everything in the system follows the patterns created by large institutional money. That is why the thing that I figured out works so well. At the time that I created it, I didn't realize how good it was. And as it turns out, as I got deeper and deeper and deeper into my trading and added more points and got heavier into it and more advanced myself, I started to realize that. And this is why the information taught in the class that I teach is so valuable. How many systems can you trade in multiple purpose ways and time frames with conviction? Not that many. Not that many. I don't really know of that many. Oh, John was saying, how can I tell that we're shorting, not buying? Hold on, let's go back here. Okay. It is possible. Without talking for 3 more hours, it is possible. Let me show you an example that might be easier for you to see. Okay. So what happens here? You're in the trade. It's a beautiful thing. Okay. You're up money, and you say, I have 100% conviction this is going to $13. I'm not getting out, not 1 penny. All right. Then it starts to go green. What do you do with yourself? Are you concerned? Are you sweating bullets? What do you do? Should you get out? Is this fine? What's happening here? What do I do? What do I do? What do I do? This green bar, what does it do? What's really happening with this green bar? It's covering Y. Look. This is all that it did. It just made a push up to resistance. And then it held immediately because that red guy came back down on top of it. Then it rallied up again, and then it held and went doops a little bit over it and held immediately and held again and held again and fell and then fell into the target. Can you see my pointer? Yes or no? Oops. Can you see my pointer, you guys? Yeah, Kathy can put my phone number in the room for anyone who wants to call me after we're done tonight. Obviously, I can't talk to you on the phone now, but tonight I could. Does everyone see this arrow, this pointer? I'm trying to point out where the bars are here. Okay, so if you were concerned this was over, how would you know that it's over or it's just a rally into resistance, which means it's short covering, not buying? Buying means that it's going to change the trend and it's going to go from being in a downtrend on this 1 minute chart to being in an uptrend on this chart. This never, not the whole entire day, was ever in an uptrend on this chart. Again, this comes into the point of reading exactly what's happening in the chart as far as the trend. The stock was never in an uptrend the entire day, and not even the 1 minute chart. I'll just point that out. Do you see the humongousness of this bar? The 1 minute time frame, the smallest time frame I used to trade on, but unless you want to trade on a tick chart, okay, was never in an uptrend the entire day. It was in a downtrend the entire day until it closed and ran out of the time. You know, I don't have any issue with getting shorts. You've got to find the right broker, Steve. And if you don't have one that can get you them, then you got to change brokers. Boom, that's it. You got to trade so you can get this stuff. And it's 100% possible. And there's a million places out there. If you're interested, email me. But this was never in an uptrend, not even on the 1 minute. I mean, talk about having conviction and what you're supposed to look at, what it's doing. This didn't even get in an uptrend in this thing. It might have looked like it was done, but it wasn't. And even this was only a rally into resistance. A rally into resistance means people are covering out of the trade. Some people got out of here, you know. Would you hold this thing down to get 18 cents when you're up $7,000? Probably not. Okay, but the reality is that some people probably did hold more down and said, I'm making the extra $720 or whatever in this risk, in this trade. And they're up so much, they're not sweating bullets anymore. They're letting it rally up and they're going to put the stop over the area. And they know that into the lunchtime period, things rally. And that's a fact too. If it's underway all morning, stuff doesn't go down in a straight line like that. Boom. It doesn't. It will wiggle and jiggle. How do you know the difference between a rally or a change in trend where the trade is done? What happens? Sometimes these things push and they go, whoo, and then they're done. I mean, literally, sometimes it happens. Sometimes they go so hard, they collapse into themselves through the ground, and they do it so hard, they bounce, okay? And then they could be done. So how are you going to recognize that? Again, advanced level, you have to know that because you don't want to stay in something too long. You don't want to stay in something too long and then give back your money and your position. So you have to manage what's going on here. This big green bar, which looks big, which isn't, reversed flat back on itself as soon as it ran up. All right? And this never did what I would consider anything that looked like a scary green, meaning rally up and actually continue in a way that it was being bought. Every time it came up, it was to resistance and came back down in, came up and immediately came back down in, and then rallied up to resistance again in a feeble attempt to save itself, and it can't do it. Feeble at best. If you could count the green bars probably in this 1 minute chart on two hands in a long number of minutes in a day, there's hardly anything to do here with anything other than short. This is shorting the direction. That's why you got to get it right. That's why you got to see it. And that's why if you see it ahead of time, If you forecast the price direction ahead of time, you will be able to take this trade or this trade. And if you cannot do that, where did you get in? Where was the entry? Here. This is extremely late. It's 10:30. You've missed $1.25 on the move. I'm probably out of half of this or the whole trade into here. And, you know, what are you going to do? Does this have high odds of continuing down to the bigger number? Maybe. But what if it doesn't? You missed a great trade in here. All right. And also, this type of advanced skill set not only will put you on a level of a professional, it's going to help you get conviction. It's going to help you take size in trades. And taking size in your trades is going to help you make money as an individual. That is how you're going to do it. You have to be comfortable with it. And the only way to be comfortable with it is to get good at what you're reading and knowing so that you know that this is good. How do you know it's good? You have to learn the information and then put it into practice. Because if you're not comfortable taking the risk, you're going to muck it up. All right. And the only way to be comfortable with the risk is to know exactly what is going on. To know that this push up here was to that number that I set on the daily chart and not being bought. When something's being bought, it looks different than this. Okay. It would continue in a nice flush. Just like this continued in a flush here and this continued in a break into here. It looks like a flush. I don't have any examples of anything like that right here now to show you, but it looks different than this. This tried to go up and couldn't and did a little bit above it and came right back down and settled itself and settled itself and settled itself and broke. Ran up to resistance, can barely count the green bars in here. They're tiny, tiny little dojis. They set up and it breaks. This is a reason to learn this information in here because there's so many great trades that happen like this with beautiful entries and beautiful stops. How are you going to know to do this correctly and put the stop in the right place besides? Because the stop has to be at the right place too. So getting back to what I teach, okay, and the reasons to do the class is to not only learn how to trade gaps, but to really learn the side of what the big money is trading on. That's the reason. That is one of the biggest pluses in learning my information besides the checklist. Having a checklist is like being a pilot. You've got this information, you check it off, you can move forward, you can take the trade. If you can't, you can't. Would you get in the plane and go out in a fighter jet and do your job and put yourself in front of the enemy or risk money in the case of a trader if you didn't have 100% conviction that it met all the requirements of the checklist? Your engine was working, the bullets were working in the plane, you've got enough fuel, enough air, you've got everything, all the gauges are correctly, everything. You wouldn't do that. You wouldn't put yourself in that position knowing that you could die if you do something incorrect by don't having all the things checked off on the list. You would decide not to take off. You would change the date. And it's the same way with trading. If you decide to take a trade and risk money, and I don't care if it's a lot of money or a little bit of money, it's your money. Take good trades. I'm teaching people how to take good trades. And that comes down to trading on the side of big money. And that's why I never, ever, 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 ever trade against it. So you've got to learn what quality stock picks are and what that will mean for your profitability, which will mean consistency. More consistency than you might have ever had before if you're a trader right now and doing many different things. Joey's asking me, do I use moving averages or other indicators? I use moving averages, no other indicators. We'll go back and look at a chart really quickly. The class is $19.99. I'll put it in the room, and I'll get to that at the end here. Here's my indicators. The indicators I use is this. This is it. My charts are very clean. I was discussing this with someone else today too. This is it. If you're using indicators and they're not helping you see the price clear enough, take them off. You use stuff if it helps you. If it's not helping you, don't use it. It creates confusion, and if you don't know why you're using it and it's causing a problem with you reading the actual numbers, then take it off. This stuff doesn't interfere with my reading of the numbers. Therefore, I keep it on and I use it. No, I don't have any special charting package at all. This is a simple Perry moving average of the 200. The 20 is the blue. The 8 is the black. I read my candlesticks and I'm reading the price. This is what I'm teaching is so much focused on the price. You don't need 1,000 indicators. I probably could trade without any charts at all if I just had numbers to look at. You know, they used to do that a long time ago. What did they call it? I forget. You know, the whole point I'm trying to make with the way that things are moving is that man will come up with more indicators and more indicators to try to defeat these machines that we're trading with now. But it's never going to serve the purpose, which is just use the math. Use the numbers. Your best way to trade, your most accurate way to trade is with the price. And that's how real professionals trade. And yeah, they use indicators. You can pick this, you can pick that, you can do whatever you want if it helps you. But if it's taking your focus away from the price, then it's hurting you, because then you're missing the whole game. Is to get it at the best price, to get the move, to make the money. That's it. That's what it is. This is what this is about. Yeah, reading the tape. Reading the tape. I could have been born in 1905 and traded with those people. If I went to a time capsule and went back there, I'd probably still make money trading. And I wouldn't have any of this stuff to look at. I couldn't do it out of my house. I'd have to go down to the place. But I could do it. And I don't live and die by these things that I have on my charts here. I can exist without them as long as I have the numbers. And that is where I would like people to learn from me to get to that place. This reliance on all these indicators is hurting your trading if you put too much focus on that and not enough on the price. Okay, well, let's go back. So it's really about the quality, and that's what's important to be successful. If you want to be profitable, then quality matters. It matters because if you want to trade with size, you will need to have precise entries and quality picks. Master traders read charts with a precision that is required for large profits. Once you start learning how to read charts in a more detailed manner, you will immediately see a difference in your results. You will. You will see a difference in results. Whether it's more consistency or more profit for the risk to reward, you'll see some type of change that it will be noticeable. It will actually be noticeable in your P&L. Having detail in your trading is what is giving you an edge. No, I wouldn't just trade the moving average. That would be like putting a blindfold on or leaving my computer when I'm in something, which I rarely do. I won't do it. You know, I do not use that. I do talk about money management in the class. I do talk about that as well. I talk about that a lot with people that just want to talk to me about it. You've got to mirror the professionals. If you looked in the mirror and saw what was staring back at you, what would you want to see? The you want to be. If you are not the you want to be right now today as a trader, how are you going to ever get to the point you look in a mirror and say, I'm the me I want to be. I'm where I want to be. I'm successful. I'm trading. I'm happy. I love my life. If you looked in a mirror and saw the reflection back at you, the reflection you would want to see is the reflection of a professional. Every single person wants to be that in whatever they want to do. And if you haven't thought about these things, I'd like you to think about them. This is important. If you had a chance to be on top or on the bottom, where do you want to be? You want to be on the top. You want to be with the professionals. That doesn't mean you have to run out and become a stockbroker and managing big money. You could be a professional living at your house, managing your own money in your own world. That's the professional. So the Golden Gap is a class that I teach. And it teaches technical analysis on an advanced level. The class teaches how to comprehend, calculate, and determine the price action to follow the large institutional money that is trading stocks in the market. And this is how you can profit, and profit substantially as one individual. The system is designed to follow the patterns of large institutional money. Trading on the side of the big money is how to become prosperous trading. And the reason the gaps are good is because when something's gaps, it's forcing an action by the people that have positions in the stocks that have big money. It's making them look at their trading positions. Do I want to get out of this today? Do I want to enter this as a swing short today? It's forcing these people to, these things are in play. It's forcing them to look at it. The Golden Gap course is a serious study of stock charts, and the class is an education of how to determine the direction a stock gap will make on the day and how to trade it properly, which is extremely important. Knowing when something is setting up into a rally to short, or knowing whether it's real buying that's coming in, you lay off. The class also educates traders on how to read resistance and support at an advanced level. Let me tell you, all the things I've learned, people struggle with this. They really, really do. I'm blessed that I know what I do about this stuff. It's a gift that I'm able to teach it to people. People struggle with this support and resistance stuff. I understand where people are coming from, but it is easy to learn if you know what you're looking for. Just like I showed you the way that DLLR ran up to the number, boop, it ran right up to it. Beautiful, 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 beautiful. So trading with the big money equals prosperity for you as an individual. As soon as you can come to that conclusion, you're going to be able to make some adjustments in your trading to move forward. Trying to trade against this is a nightmare. You'll never end up you'll be a scalper. You'll be scalping and scalping and scalping. In fact, we were discussing this in the room today. You will lose more on scalp trades because you're going to have to take 8 trades to equal 1 good trade that I would call in something like DLLR. And of the 8 you take, the scalpies, okay, 4 may work and 4 may fail. Therefore, you have to take 16 to equal the 1 good trade I take in this. And then, of course, after commissions and everything else, and the over trading by doing the scalping, what do you have left? This is the way to do it. And how can you hold a scalp trade that's in the opposite direction of the daily chart? You can't. And therefore, then you should only scalp if you're going the opposite direction of the daily chart. The daily chart direction is what needs to be learned and read correctly and played. And that is how the big money is trading. It is saying, I'm doing this with the money. Come with me if you want, or don't. It's your choice. That's how you get these momentum kinds of swings. Joey, I give classes on Saturdays and Sundays because I trade money through Friday. So the answer is no. I do classes on Saturdays and Sundays only. Hopefully that can work in people's schedules. I don't want to give up my own trading to do the class. I love doing the class. I love reaffirming the information I teach. So I'm doing it on the weekend so it doesn't interfere with my personal trading. And so that's why I do it that way. That's why I have it scheduled that way. I hope that you can accommodate your schedule accordingly. However, I don't want it to interfere with my trading patterns. If I ever make a change in that, it would maybe on a day where it's a holiday with the market, but then people will be on holiday and I might be on holiday. So you've got to become a professional. You've got to ask yourself, how badly do you want it? This is a conversation I have with people very often. They're back and forth with their trading. They're trying to figure themselves out. They know there's money to be made in the market. They're struggling, but what do? You asked yourself, how badly do you want it? Do you want it bad enough to learn something new, or to learn a different way, or to learn something at all? You've got to want it. You have to want it. If you don't want it, then why are you doing it? This isn't a hobby. This is real. There's real money to be made in the market. And if you decide you want to learn it and go to school, as if you were going to school to learn to do anything else, becoming a fighter pilot, a doctor, or a dentist, anything, you can learn it. Yes, Jay, I'll answer that in a minute. The DLLR, I don't remember if I put that one on YouTube or not. I might have done a video and not put it up, or I might have put it up. I don't remember. I don't put up every trade I do. I kind of do them when I feel like it, to be honest with you. The trades I post on YouTube. If I have time, I'll do one. If I don't, I don't. You have to go look on there to see if I put it up. You've got to ask yourself, what are you waiting for? If you've been thinking of learning how to trade or learning gaps or something new, what are you waiting for? Second quarter earnings season starts in a week. This is a great time to trade, and while I'm doing the class this weekend. Open the door of prosperity for yourself by learning advanced skills. I'm going to answer everyone's questions at the end, then. I'll just finish up answering everyone's questions at the end. Let me get through this. The Golden Gap 26-point rating system is a checklist, and the reason the checklist is important is because any professional goes through a checklist before they do their job. If the job is trading, you have a checklist. The checklist is right next to you, and you go through the checklist. If it meets the checks, you do it. If it doesn't meet the checklist, you don't do it. Do you understand what I'm saying? So it is a complete system to help you make money, which is what everyone needs. And I've had people come and tell me that my system is a trading plan. I didn't design it necessarily for that purpose, but in reality, it is my own trading plan because everything I teach is everything I use and how I trade. So the class is the 13th and 14th this weekend. Someone had asked about the price. It's $19.99. If you are interested in this class and signing up, email me at melissa@thestockswoosh.com. I try to take a certain amount of people because I want to have a boutique class where I can answer everyone's questions thoroughly and people can genuinely learn. The Golden Gap course is your path to wealth and success in the market because you're going to learn how to read charts in a way you never knew how. And if you don't believe me, ask me for referrals and I'll send them to you for every person that's trading with me or is taking my class. The other thing I'm offering for this special, for this April class, is another course. It's called Wealth Manifestation. I'm giving this for free with anyone who takes the class this weekend. This class doesn't talk about charts at all, even though they're important. This class is about your mind, your brain, and money and how these things coordinate for your own success. I 100% believe that it is possible to become wealthy trading the market. And part of that, once you reach a level where you learn what to do, will have to do with your mindset and how you relate to money. This class you can take separately. It's $350. It's from 1 o'clock to 4 o'clock on April 18th. And anyone that takes the April Gap class will get that class for free. So you will get the Wealth class for free with the Golden Gap class for $19.99, or you can do this other class separately. But you get it for free with the Golden Gap class and you learn how to trade gaps. Remember, learning is fun. Thank you for coming and let's answer anyone's questions. Okay, I have a lot of questions here. Let me go through everyone. Someone said I have a great voice. Thank you so much. I do have a live trading room. And so people take the class and then they're in the room with me after they take the class, if they decide they want to be. And then that helps them to learn this stuff and really sink in to get a good foundation for moving forward to read these charts and read the gaps and take the trades. So people take the class and then they're in the room and then they're trading and practicing, learning it at the beginning, small, and then they build up to it over time. Thank you. Thank you. Angel saying he likes my energy. Let me look at all the questions here. The trading room is $250 a month if you are not a student of the Gap class. If you are a student, it's $200 a month. $250 a month if you're not a Gap student. $200 a month if you are a Gap student. And I talk to people that are students of mine that are in my Gap course and that are in the room that email me to go over charts. I do my best to really teach people. I think that it's important. And I'm trying to set myself apart in the market by doing my best to teach people really how to trade correctly. Let me look and see all the questions. Once the class is over, will we need to cover with other courses, or is this a one-off course to learn to get to an advanced level? No, this is it. This is the only class I teach. I may do a class someday just on pure technical analysis. I've thought about doing that. Actually, I thought about doing an advanced course in technical analysis, but it would be really just on price reading patterns. It wouldn't be how to trade gaps, which is the Gap class. And if you take the Gap class, you're learning advanced chart reading skills. This is the only class that I teach on trading. This is what I do well. I'm in the business to do something that I know very well and teach it to people. I'm not in the business to teach 1,000 classes. I'm a trader. I'm teaching what I know. That's the best way I can put it. I am teaching what I know and what I'm very good at. Let me just see if I answered. So this is the class. This is the class. I don't have any other classes right now. Will I have a beginner's class someday or an advanced class someday just in technical analysis? Possibly. But I'll never, ever, ever teach any other strategy but gaps. Mark my words. Write it down now. I will never teach anything other than gaps. All right. This is, anything I teach would be in conjunction with gaps. I teach an advanced class. It's all taught in that class, and I'll never trade anything but gaps for the simple reason that I'm talked all night tonight. That's what's moving the money patterns, whether the pattern is being changed in the positioning of the gap or continuing what I call a continuation gap. I will always trade with the trend of the daily chart when it sets itself in a gap, and I'll never ever trade any other way, and so I'll never ever teach any other way because I don't think anyone should be trading any other way if they want to make a lot of money. I don't use any scanning software. I just have it on my platform. You can get scanning software wherever you want and pay for it. You can do that. If you want to do that, that can help you find some gap downs in the morning, or you be in the room with me and I pick them, or just use the ones in your platform. If you're interested, you can email me, Sean, about that. And let me see if there's anything else here very quickly. Let me make sure I got everyone's questions. Does anyone have any other questions? I think I got everything. Let me know. Let me know. And right now, let's just check and see if there's anything out tonight. I know Alcoa reported. Was that tonight or this morning? I think it was tonight. Hold on. Let's just check it. Let's just check it. The room is open every day from 8 a.m. until noon.